We have Mr. Chakravarti joining us now of Shriram City Union Finance on the steady recovery that they've been witnessing. Mr. Chakravarti, thanks for joining us. Now, a really positive note that the year has started off with the vaccine news. On the economic front as well, we've had analysts upgrade India's GDP growth outlook. What's the current credit growth environment looking like?
I think for us, it's been a very positive quarter that has ended, and I think we also had a good start for the first 4 days to the year. So, credit growth, though, actually compared to last quarter, we have doubled our disbursement. So I think that speaks for itself. Across products, both two-wheeler, SME, loan against gold, everything has grown, and we have almost quarter two, we have doubled it to almost close to 6,000 crores the December ending quarter. I think there is a good uptick in demand, particularly the demand for SME loans has picked up. Businesses are seeing volume growth. They are actually are now looking at their requirements for working capital is going up, which is a good sign. So I hope the new year turns out to be positive.
Okay. Now, auto financiers have also witnessed a sharp recovery, led by the kind of pickup we've seen in the sector. Do you see the share of two-wheelers rising in the AUM mix? And, what, according to you, is also driving this demand? Is it structural? Do you see it sustaining?
Actually, 1920, the whole of calendar year of 20 was also not a good year for a two-wheeler. So I think from on the back of that bad year, I think particularly the last quarter it picked up very well. I think it's also a pent-up demand. Number two, the need for personal transportation because of the COVID thing, and also rural economy. I think the liquidity that is getting pumped into the system. Particularly rural, semi-urban areas, I think that is what is translating into increased sales is the sense that I get, particularly for two-wheeler. And as a financier, I would say it is also because of the ticket sizes going up, the cost of the vehicles going up, more people opting for finance.
Fair point. Given that funding costs have also eased for quality players, not just you, with the boost in margins, will this boost in margins actually be absorbed, or have you passed on the benefits of lower funding costs to the consumers? How do you see the margin trajectory actually shape up going forward is what we want to try and understand.
See, some of it, yes, we did pass on. So particularly for the two-wheeler during the festival season, we did pass on some of the advantage in cost of funds to the customer. But see, for a companies, probably for a AAA companies, there is a lot of leeway there. But for AA companies, it's still, I would say, the cost of funds has come off by about 30-40 basis points. So it's not much. So we have to see how it pans out in this quarter and then work out. But for two-wheeler customers, we did pass on some of the benefit of the low cost of funds.
Sure. Also, given the recent rally that one has already seen, Mr. Chakravarti, in the stock prices, market watchers are now factoring in lower than expected NPAs and restructuring. How is it that you see the asset quality shaping at both an industry level as well as for the company level in the coming quarters?
See, I think NPAs, particularly, I would say at an NBFC industry level, particularly for retail NBFCs, I think it's well under control now. Customers have come back, they're paying well. And on the restructuring side also, I don't think the industry has seen much of request for restructuring. It is lower than expected, as you said, and even for us, it will be less than 1%. The initial expectation of huge restructuring is not happening because I think there are two factors. One is I think since the volumes have come back and businesses are able to generate cash flows, they are not looking at restructuring. I think they are looking at weathering this shortfall in working capital and then get on with it rather than go for a restructuring. Second is also there is an apprehension that once you get your account restructured, most of the business people that I've talked to feel that it will be a black mark on their record. So if they are able to, the thinking is that if we can manage without going for a restructuring, let us manage. That's the thinking that I see in most of the businesses. So on the NPA side, I think it's the industry has done a very good job. I think it's well under control, not too much of a stress. So things should get better going forward.
Chakravarti, great to have you on the show and wish you good luck for the year ahead. Here's wishing you a happy new year from all of us.